welcome to the channel. In this video, I would like to present you a simple but very effective trading strategy based on one of the features of the G order flow indicator. But let's see the disclaimer first. So first of all, let's set up our charts. For this strategy, we use Renko bars. I mostly use the Unirenko bars type. If you don't have the bar type, I'll leave a link in the description. For demonstration purpose, I use a bar size of 5 ticks, with the open offset set to 5 and the tick reversal set to 15. It is important to have the first two values set the same, and the tick reversal must be 3 times the first two values. Also, it is important to have the tick replay enabled, otherwise, you won't see the historical signals. Right now I am presenting the strategy on Nasdaq because it has much more volatility, but it works the same way on any asset, as long as it has level 1 data. If you wish to use the strategy on other asset, set the Renko size according to the volatility of that asset, but remember the rules for the Renko bars. The tick trend and open offset must be equal, and the tick reversal must be 3 times the first two values. Now let's set up the indicator. For this strategy, I will enable the force index, set the order flow arrows minimum confirmations to any value above 10, as I don't need them right now, and set the minimum confirmations of the volume analysis signals to 3. I don't need any other functions of the indicator, so if anything else is enabled, you can disable them from the functions menu. Also, I don't need anything in the subwindow, but if you wish, you can select anything from the available subwindow types. Now, let's talk about the strategy itself. This strategy is a trend-following divergence strategy. But unlike other divergence strategies, this one is easier to understand and more reliable, given that it is based on order flow. In other words, the interaction between real active market participants, and not some lagging retail indicator. Before we dig into the rules of the strategy, let's see how the indicator works. The indicator uses a proprietary formula to calculate the effort needed for the price to create a swing. You can see that whenever a swing low is forming, the indicator plots in real time a corresponding value to the most recent low. Also, it displays the ratio between the current swing low effort index and the previous swing low effort index. In this example, the current swing low's effort index is above 300, while the previous swing low's effort index is 73, and the ratio is over 400%. The same goes for swing highs. You can see that the previous swing high had an effort index of 194, while the current swing high's effort index is now over 400, and it is increasing until the swing high is finalized and a new swing low is forming. I intentionally left the volume signals enabled in the subwindow so you can understand the principle. In the subwindow, you can see lots of dots and triangles. The red dots represent candles with relatively high volume. The green dots represent candles with relatively low volume. All those triangles represent an order flow pattern, but I will dig in more in detail of that in another video. What matters now, and is of interest for us, is that whenever 3 up triangles or 2 up triangles and a dot appear on the same candle, and the close price of the candle is greater than the open price, a green up arrow is formed on the main chart. The opposite goes for the down arrows. Of course, you can change the colors of the arrows in the indicator inputs. We will use these arrows later on for our entry confirmation. Now let's talk about the rules. For a long setup, we need to have a swing low forming. The most recent swing high must break the previous swing high. The current swing low must not break below the previous swing low, and the current ratio must be above 100%. In easier terms, we have a break of structure, followed by a pullback. You can easily identify the swings by the numbers. To explain it, it means that the sellers are more aggressive in the current swing, trying to push price lower, but they are met by even more passive buyers. For a short setup, it is exactly the opposite. We must have a swing high forming that is below the previous swing high, and the most recent swing low must be below the previous swing low. Also, the ratio must be over 100%. In this setup, active buyers are trying to push price higher, but they are met by passive sellers and fail to push higher, eventually giving up. I personally prefer the ratio to be over 150 or even 200%. It is up to you, but it must be above 100%. Before we get to the entry confirmation and the actual execution, let's talk about stops, targets, and see the built-in chart trader first. It's specific to this setting of the Unirenko bars that the reversal candle's body, the difference between the open and the close, is 3 times the body of a trending candle. In our case, since we have set the tick reversal to 15 ticks, the reversal bar's body is 15 ticks, plus eventually any wicks, so we have to set up our stop will be 20 ticks, in case price breaks the low of our entry candle. I set the profit target to 15 ticks, and save the ATM. The target is only a personal preference. The risk-to-reward ratio in this case is lower than 1. Actually, it is 0.75, but I am comfortable with this. You can use any target you wish, but I suggest to leave the stop being the size of a reversal candle plus any wicks, meaning 4 times a trending candle. The indicator has a built-in chart trader that you can easily access by simply opening NinjaTrader's chart trader. You can see we have 5 buttons: long, short, cancel, limit, and stop. By selecting limit and pressing long, the indicator will stand by, and once the candle closes up, it immediately places a buy limit order at the close of the previous candle. Note that it will only trigger if the current candle closes bullish. Otherwise, it will be disabled, and at the next setup you will have to press the long button again. While the indicator waits for the candle to close, a long on message will appear at the top right corner of the chart. So you know you have a long limit order waiting to be activated. The advantage of the limit order is that it gives us better entry price. Even the slippage is in our favor, but the disadvantage is that price might not return to fill our limit order. If the limit order is not filled, you need to cancel the limit order by pressing the cancel button, or you can press the cancel button even before the candle closes. This way the indicator will not place any orders at the close of the candle. If you wish to enter a trade by a stop order, you will have to press stop and long, or short, respectively. This way the indicator will automatically place a stop order long or short at the price where the current candle will close. The advantage of the stop orders is that it guarantees the fill, but it does not guarantee the price, and any slippage will be in our disadvantage. Once the stop order is placed, you can cancel at any time by pressing the cancel button. Note that the trading buttons work regardless if you have any arrows or signals from the indicator. These buttons are built in the indicator, but you can use them at your own discretion. And now let's finally talk about the entry and execution. You can see in this chart that we have all the conditions met for a short trade. We have a swing high formed. The current swing high is below the most recent swing high. The current swing low is below the most recent swing low, meaning we have the break of structure, we have the ratio above 100%, and as mentioned earlier, we have our arrow for confirmation. Now you don't have to wait for the candle to close. All you have to do is to decide if you wish to enter a trade by a stop or a limit order. I decided to enter with a stop order, so all you have to do is to press the stop and short buttons, and the indicator automatically takes care of the rest, meaning it will place the stop order, and if the candle does not reverse, we don't enter the trade. Simple as that. In this case, the price did not reverse. Our stop order did not get filled, and price broke the most recent swing high, meaning that the setup is no longer valid. In this example, we have a long setup. We have our swing low forming, with the current effort index being over 500. We have our break of structure, and our current swing low is way above the previous swing low. The previous swing low effort index is 38, so the ratio is over 1,500%. Also, we have our arrow, indicating that the reversal candle meets our entry conditions. In this example, I used a buy stop order, so if the signal candle closes bullish, it guarantees my entry. You can see that the order was filled, and the target was hit within seconds. You can see that I used sim account and only one micro contract in the video. This is only to demonstrate the strategy, but you can always change the contract size according to your risk preference. With my 15 ticks target and one mini contract, the gain would have been $75. Remember, I use 5-tick Renko bars, but as I said at the beginning of the video, you can use any Renko size you wish. With a 10-tick Renko size, your stop would have been 40 ticks, and the target, according to my preference, would have been 30 ticks. With one mini contract, it means $150 profit. In just a few seconds, let's look at this short example. We have the break of structure. The current swing high effort index is 68, which is not much, but it is still bigger than the previous swing high's 58, so the ratio is above 100%. Also, we are below the previous swing high, although not by much, but we are below it. The arrow popped up, indicating that we are good to go. Stop order again. At the close of the current candle, the candle closes bearish, so we are in the trade. And a few seconds later, the target is hit. Now let's look at a few more setups, but also do some exercises. I'll show a few charts, leave them for a few seconds for you to try to find the setup. Then I will show the setups on the chart. talk about some basic, common sense trading rules. First of all, manage your risk properly. The benefit of this strategy is that you know your risk before entering a trade. You know that your stop is 20 ticks, and the tick value for a micro Nasdaq is 50 cents. Therefore, you can calculate how many contracts you want to trade. Don't overtrade. Set yourself a daily goal and a daily loss limit. Once you hit one of them, walk away from your PC and enjoy the day. Depending on your daily stop and target and the Renko size, most of the time your trading session only lasts for about an hour. Don't chase trades. Don't try to find a setup when there is none. As you saw, you have plenty of setups. Your job is to find the best ones. Think of it as if you are a hunter. You have your gun and a few bullets. You only want to shoot when you have a clear sight and know that you can hit your target. You don't want to waste your bullets. Otherwise, you can go home with empty hands. This can translate to closing the day in a loss or even blowing your account. Accept the losses. There is no 100% strategy, and this strategy is no exception. You will have losses, but you must know that every trader loses sometimes. If you know that your setup was good enough, don't let the loss ruin you. There will always be another trade, and if you follow the rules above, you will surely be able to recover that loss. I hope you liked this video. If you want to try the indicator, I leave a link in the description to the Discord channel where you can download it from. Also, if you found these informations helpful and want to see more such content, help the channel grow by subscribing and hitting the like button. See you at the next video.